Hey everyone, welcome back to the channel. Today we're analyzing the Hyperliquid HYPE USD chart, a rapidly emerging DeFi project that's starting to display fascinating early signs of a potential macro-level shift. Because HYPE is still a newer asset, we don't have enough daily price history to generate the full infinity signal projection. But what we do have, the weekly and monthly infinity signals, is already showing strong predictive confluence worth paying close attention to. On the Heikin-Ashi chart, we can clearly see that Hyperliquid has broken out above its lower regression band, while the simple moving average trend is beginning to flatten. This kind of structure typically signals that bearish exhaustion may be forming, especially when coupled with the bright green Heikin-Ashi candles showing sustained follow-through. The simple moving average trend on this chart is serving as a transition signal. The red SMA line represents the residual bearish phase. The green SMA line is beginning to close the gap from below, an early indication of momentum rebalancing within the regression channel. Even without the daily component, the weekly and monthly infinity signals reveal key predictive geometry. The weekly %K and %D lines are nearing a projected crossover window, suggesting a medium-term inflection point. The monthly signal, visible through the forward dotted projections, is flattening near its midpoint, a common precursor to a macro confluence event where energy compresses before expanding in a new direction. It's important to remember, the infinity signal doesn't predict direction. It predicts when confluence occurs. But here's the intriguing part. Many times, as we've seen before, these gray projection lines and flattening windows tend to align remarkably well with actual price reversals. The Machine Learning RSI or BullVision module shows a sharp transition from deep bearish saturation toward neutral to bullish levels. The histogram's color gradient, shifting from red to teal, confirms an energy buildup phase, meaning the underlying model is detecting reduced volatility and increasing strength in the underlying trend data. Despite the current macro readings still showing trend following bearish, the RSI threshold rebound from the 30-line region suggests that the ML algorithm has identified the early phase of what could be a new momentum expansion. In other words, the data is signaling the beginning of reversal pressure, not confirmation yet, but the stage is being set. Now let's bring the traditional and predictive elements into a single framework, what we call traditional meets predictive logic. Starting with the regression channel, price is rebounding off the lower boundary, signaling that the compression phase may finally be resolving. Next, the weekly infinity signal is projecting a crossover window in early November. That points to a potential mid-cycle reversion, a shift in market rhythm where energy resets before the next move. The monthly infinity signal is flattening into equilibrium. That's a clear sign that macro alignment is building where multiple time frames begin to synchronize. Then we have the Machine Learning RSI, showing momentum shifting from negative to neutral. The algorithm is detecting early signs of recalibration, where selling pressure fades and structural support starts to take hold. The simple moving average trend confirms it. The gap between the red and green moving averages is tightening, a classic signature of transition structure developing underneath the chart. Finally, the Heikin-Ashi candles, smooth, steady, and green, confirm that short-term momentum is holding strong. Together, these signals, both classical and predictive, are all converging on the same conclusion. Hyperliquid is entering a confluence phase where compression, geometry, and machine learning logic all agree. If price maintains structure above $43 to $45, the next infinity signal event could mark the beginning of a major momentum reversal cycle. The infinity signal, trading the future.